Hello traders and welcome to my day trading strategy video, Wyckoff Part 3. In today's video, we're going to be going over first a little recap on Wyckoff Market Theory, and then we're going to lead that into looking at the individual terms within consolidation structures. So to begin with the price prediction challenge winner, we had Billion TJE on Discord. Don't really exactly know how to pronounce that, but congrats for winning the challenge. He predicted the price was going to go to around the 11.6 to around the 12.5 zone, and he did have the highest prediction, as this was where OMG USD went to. We had a high of 17.5, and the highest prediction was around around 12. So, congratulations. And he did leave a custom message for me to show to you all. Okay, so now let's do a quick recap in what we went over for part 1 and part 2 to lead into this one. So with part 1 and part 2, we talked about the 4 types of consolidation and the 5 different kinds of phases that we see. And then we went into different types of accumulation and distribution, and also reaccumulation and redistribution as well. But in today's video, we're going to be going into the individual elements within each phase and how to spot them and how to trade with them. All right, so let's begin with accumulation. So the first important part of looking at an accumulation zone is to look at the PS, the preliminary support. So what this means is price is going to be moving downward before we get this accumulation consolidation kind of schematic. So price will be moving down, and it's going to make these preliminary support levels here. So at these levels, this is where we're going to see a little bit of buying that's going to produce a minor support level. And also any retail traders who might want to trade against the trend might actually just buy right here and then get stopped out, as institutions can put limit orders to take the long positions at these lower prices here. Yep, and then after that we get the selling climax. So this is the point at which selling pressure is going to be at its highest, and this is where we're going to see massive volume as the panic of retail traders plus a long price tail and long bodies as well. So it's going to look like this with a very quick drop as selling really just, everyone who wants to sell is likely to sell here. The retail traders, that is. After that, we're going to see, we should see an automatic rally after a quick down move. We don't really want to see consolidation, and we don't really want to see this going much lower after a pause. We want to see just a quick rally back to the upside. So this is where the selling pressure is going to begin to fall, and price is going to move upward to begin to establish that consolidation zone. So it's going to begin to move back up to here, to the automatic rally, and we're going to begin to get the structure to unfold and to let us know which way price is likely to move. So after we get the automatic rally, we get 2 different kinds of secondary tests. The first secondary test that we get is going to occur here. And this secondary test is best if it either makes support at the selling climax or if it goes a little bit above, as you can see here. We don't exactly want our first secondary test in phase A to move below our selling climax. If that does occur, what that might mean is that the downtrend might just continue, and this won't even be accumulation at all. Because what you might see there is here, this coming up to previous support, becoming resistance, and then just going down even lower, continuing a downtrend. So we don't really want to see the first ST to go below the climax here. With that ST, we're typically going to see lowering volatility as price moves downward and lower volume. So that's either going to be falling volume as volume trends downward, or it's going to just be kind of flat and low volume when you look at the volume compared to the volume moving average. So this is going to show us signs of bearish weakness that many retail traders who wanted to sell have likely already sold. So we see that. And then after that, we get a quick rally around the AR, around the automatic rally, or even a bit higher. And then after that, we're going to get this ST down to phase B. So the ST for phase B is going to be a little bit different. What we're going to see here is actually a move below support and then a move right back up. So this is going to be accompanied by either a low price tail with, what did I say here? Low price tail with, or low volume plus low momentum. Yeah, move below recent support. So what I mean by that is you're probably going to see either some candlesticks that have very low price tails. They're going to be triggering some retail stop losses. Or you're going to see the type of V formation where price goes down very weakly. It doesn't explode very quickly when it goes past the previous support of the selling climax. And then when it goes below weekly, volume begins to drop off, and then we get a quick up move and we go right back into the trading range. And the reason this occurs is that stop losses are going to begin to be hit, and when retail stop losses get hit, institutions are filling their limit buy orders as the system typically works. And then also, this is not just going to trigger stop losses, but it's also going to convince some traders to actually, it's actually going to convince some traders to actually go short or even to sell their position that they might have bought in here. So those three things might be happening. So after we get the ST in phase B, we're going to get my favorite part of the accumulation schematic, and this is known as the spring. So this is going to be the most violent type of move that occurs before an accumulation begins. This being the most violent move, it is also the best spot to buy in. And this is going to be the spot where price is going to look like it just can only go downward. So what are we going to see? Well, we're probably going to see a quick, sudden move to shake out many retail traders and also to convince them the price is going to be bearish. So the purpose of this for institutions is to accumulate many long positions before we get the markup phase. And remember, the markup phase is just this phase right here. Phase D leading into phase E as price begins to mark up and then break through resistance. So we should see when this spring occurs, again, either very low price tails as price rejects those lower levels, or high volume, low price tails with high volume. So it's going to be showing that a lot of retail traders are getting stopped. Or the other method that this could also occur is kind of just what we talked about for ST phase B, where we get that low volume and low momentum move below recent support. And that would look like this. So we have initial support, we have secondary support, the ST, and then when we go beyond here, you might just see a weak move downward. But if you do see a weak move downward, you really want to see low volume. We don't really want to see volume spiking and momentum just spiking as well, because what that could mean is this is just consolidation before redistribution, and then price goes lower. So we don't really want to see that. And if you do want to buy into this kind of schematic, maybe you don't want to put a buy order below the ST in phase B. That could be a little bit risky. Instead, what you could do if you want to trade Wyckoff is wait for price to go low, to go here, and then the best entry is into the test area. So to talk about the test area here, this is what's going to occur after the spring, and this is what's going to stop out retail traders as price begins to form momentum to the upside. So any retail traders that haven't market sold yet are probably going to begin to market sell here. We're going to get that and that, as they really believe that price is just going to go lower, and then they're just getting better rates to sell before the eventual drop. It's these kinds of areas that are probably the optimal spot to buy back in when you see a confident move right back into the trading range. If we don't see a move back into the trading range, then that is not a fantastic sign. That could be that price is just breaking down and just going to continue to move lower. So it's important to get some validation before we want to make our move in the market. Okay, so then after that we have the LPS. This is known as the last point of support. So this is going to occur in phase D. Remember, phase D is here, occurs after the shakeout. So that's going to occur right here. As you can see, price goes above the test and goes back down to here. Again, at this point, the retail market's likely going to just going to believe that price is going to be bearish, and they're probably going to market sell and panic here. This could also be a 61.8 move of this, as you can see. Yep, so price is going to move weakly downward due to exhausted supply. So what I mean by weak or exhausted supply? Well, imagine the opposite of weak or exhausted demand. With weak or exhausted demand, weak demand would be that just not many people want to buy. So we're struggling to find buyers, so we're going to struggle to find people to push the price up. Exhausted demand would be everyone who wanted to buy has already bought. Price is exhausted. And these are going to have a similar effect. And we can also translate that effect with supply. So weak supply would be not many people want to sell. They just are bullish. And exhausted would be everyone who wanted to sell has likely just already sold. So we can't really find any more sellers. And this is what's going to happen. So price is going to move weakly downward due to these dynamics here. So that's going to occur here. And then after that, we're going to get this move back up. So you can see here, and then we're going to get the backup. So this is referring to the short consolidation period at or above resistance before the markup phase of phase E begins. So the backup is going to occur right here. Price goes up, begins to consolidate at resistance, or it consolidates a little bit below. or even a little bit above, just around that region. And then we're going to get the SOS, the signs of strength. So this is going to be price advancing on very high momentum and on very, very high volume. And this typically occurs after the spring and in phase E. So what's going to occur here? Well, at this point, institutions have already accumulated positions and are ready to mark the price up so that they can make money and sell at a better price. What you might also see is many retail traders who are trying to short might put their stop losses about here. So we might get a lot of stop loss triggering right there as price propels upward. But in this sense, we're probably going to get moving bid walls upward if you study the order book. That's going to be where other institutions or large traders who haven't bought into the move yet are going to put those walls, those order walls that trail price, and that's going to continue to push price back upward. And anyone who wants to market sell to them, they're going to get to fill with little fees at the beginning of the markup stage. Yeah, so then that will become the beginning of accumulation. Okay, so one thing I do want to mention before we go on to distribution and the terms that you find there is reaccumulation. So this is going to be a bit different, and what reaccumulation refers to is when price goes up, consolidates, and then continues moving up. That consolidation phase is called reaccumulation. The only difference, everything will be the exact same, except for phase A is going to be a little bit different. So with reaccumulation, we're going to see these three factors here. So if we look, just don't focus on phase B to E, we're just going to focus on phase A, and imagine that reaccumulation stage. So the first thing you're going to see with this uptrend is preliminary supply. So this is where we're going to get initial selling down to here. And this is going to produce the minor resistance level right here, boom. And volume increases on high price momentum. Yep, that makes sense. So volume is going to be increasing here. And then we get the buying climax. So instead of a selling climax, as we talked about with accumulation, with a reaccumulation, we're just going to get a buying climax. And within the buying climax, this is the point at which buying pressure is at its highest. So it's the exact opposite of the selling climax. Massive volume spike, and we're probably going to get a long high price tail. That's going to occur right here. And then finally, we're going to get the automatic rally. So this automatic rally, instead of going up as it was in accumulation, with reaccumulation, it's going to go down from the buying climax. So buying pressure is going to begin to fade away, and price is going to move downward to begin to establish this consolidation range here. Okay, so that's what reaccumulation would look like. And then phase B through E would just be the same. Okay, let's move on to distribution. So distribution is going to be moving similar to accumulation, but just a lot of this is just going to be the opposite and with a few different terms. So what I mentioned before is these three, so I don't really need to go over these again, but instead of for this acting for reaccumulation, this is going to be acting for distribution. So that's going to be occurring right here in phase A. In phase B, we're going to get a secondary test on lowering volatility as price moves upward with low volume, and this is going to show us signs of weakness. So this is going to occur, yep, here. So price moves down, price moves upward, but it really struggles to move upward and break the buying climax high. Again, same thing with what I talked about before. If you see this type of formation and you see the automatic rally and this all looks fine, but you see that the secondary test moves well above the BC, the buying climax, that could just be market shakeout, price just continues to go higher. And you might not get distribution. So that's one thing that you want to look out for when you're noticing these Wyckoff patterns. I almost said Wyckoff. It's Wyckoff, not Wyckoff, dude. Yeah, so that's what the ST is going to be. Then we're going to get the SOW, the signs of weakness. So the SOW in phase B occurs here when we move below the automatic rally. What that's going to be is, like I said here, moving slightly below the consolidation zone on increasing momentum and increasing volume. So that's going to really prime the downtrend before it occurs. And then we're going to move right back up into the trading range before we get the upper thrust. So when we get the up thrust, that's going to be on lowering volatility as price moves upward and has lower volume readings. So this is going to show us signs of bullish weakness. Because if the bulls were strong, then this move would probably have high momentum and high volume, and price would probably close high and continue to go higher. But when it actually closes here, a little bit above, and then goes right back in, that's going to trigger many stop losses for shorts who are trying to short this market because they believe market will go down. And when many short stop losses are hit, that's going to be institutions are going to be able to put limit sell orders out so that the short stop losses, which activate as a market buy order, are going to be market buying the limit sell orders for institutions. What this is also going to do is going to have retail traders who are going to market buy into the top here. So that's going to also just fill the limit sell orders for institutions, just as short covering, short stop losses would do as well. Okay, so that's going to be showing the signs of the bullish weakness. After that, we're going to get the UTAD, the UTAD. This is the upthrust above distribution. This is the same exact thing as the spring, but just inverted. So again, it's going to be my favorite move within consolidation structures. So this is going to be a very quick, violent move above the consolidation zone, which typically is going to have high price tails and high volume, or weak momentum and weak volume. So it's probably going to look like boom, boom, boom with a lot of high price tails, or just price struggling to make a new high and then closing right back in the trading range here. What this is going to do is anyone who is trying to short again after here or trying to sell again here is just going to be convinced that the market's going to continue moving upward. And when they are, they're going to be market buying. And this is going to trap some of those breakout traders who are trying to make money on this eventual uptrend, and then price is just going to begin the markdown phase. And then here, they're just going to try to find more spots to buy in, but to their horror, price continues to move downward. So that's what I was talking about here with the LPSY, the last point of supply. This is going to occur in phase D, where price moves weakly upward due to weak and exhausted demand. So price is trying to move up here, but there's really just not enough institutional demand not enough institutional demand for the institutions to allow retail to push price higher. So price doesn't really go much higher. And then we go back down here to the sign of weakness and another LPSY. So the final sign of weakness is going to occur with consolidation at support. And this is going to be the end of phase D. So this is going to become the beginning of the markdown. And again, what you're probably going to see is price is going to be consolidating on weak volume as it moves sideways. And it's going to try to make some moves back upward to maybe convince some retail traders that the market's going to go up and that they're buying at a phenomenal price. They're buying at support. But what they're actually doing is filling the limit sell orders for massive order walls, offer walls that the institutions are putting out. And then price goes lower. Finally, I do have to talk about redistribution, just as I talked about reaccumulation. So redistribution is just going to be the opposite. So phase A for redistribution is just going to mirror phase A of accumulation. So what I mean by that is that if we look at accumulation here, the phase A, right? This phase A would just become the redistribution, price going sideways and then continuing to move down. That is known as redistribution. Again, just same things here, just copy pasted. So you can pause the video and read that if you want to. All right, let's take a look at some live examples and we can label them. So to start off with, what does this look like? Does this look like distribution, or does this I can't talk. Does this look like distribution or does this look like accumulation to us? It's either going to be distribution or reaccumulation. So the first thing I do see is the buying climax, which seems to occur around here with some preliminary supply. And I'm just going to show it here. In 5 seconds, I'm going to reveal the way that I drew this. So if you want to pause the video and try to work out this on here, go ahead. So 3, 2. Yep, so this is what we got. So we got preliminary supply here. The buying climax is volume is really increasing here. A lot of retail traders are buying in. This is distribution. After that, we get the automatic rally down. We get the ST right back up to about resistance here, but it doesn't break the resistance. Again, I'm referencing this distribution to this right here. And then after that, we get our ST, the secondary test, and the sign of weakness. Sign of weakness, beautiful. After that, we get our upper thrust right here with the UT, beautiful. Then we get this kind of consolidation move, as you see right here, boom. And then we get the UTAD. Notice some really interesting things that occur with this UTAD. I'm really seeing not a lot of volume. You might argue that the volume is above the moving average, so that would indicate that price is likely to move higher. However, when price moves beyond resistance or when price moves beyond support, that is known as a large effort move. It takes a lot of effort for price to break resistance and continue in that direction. So with a large effort move, we're going to need to see a large amount of volume and a large amount of price momentum. I'm not seeing a large amount of price momentum when price breaks resistance here. And I'm not really seeing a large amount of volume. We would need to see this amount of volume here for price to go upward, and we don't. Finally, we get the LPSY, as some traders try to buy back in, or to market buy back into the market, but then fail as we get that bearish engulfing candle. Finally, we get the sign of weakness here, right? LPSY, SOW here, and a bit of consolidation that occurs here. Consolidation before we get the markdown here. Price just crashes right down, and this is phase E. Phase D, we had phase C right here, right? Phase B, and then we had phase A, which was the buying climax. So this would be distribution, and I'm hoping that you noticed that from the initial picture here. And if you didn't, well, that's fine, just keep on studying. And now we have another one here. So this was a previous uptrend, which means that this is either going to be, I'll give you guys 3 seconds for this one. So this is either going to be distribution, accumulation, redistribution, or reaccumulation. It's going to be 2 of those. Yeah, so this is either going to be distribution or accumulation, or reaccumulation, because we had a previous uptrend. So does it look like institutions are trying to accumulate positions, or does it look like they're trying to distribute positions here? I did cut off the volume, unfortunately, here by the video, so you can't really see it, but I will say that the volume here is quite high. And again, I'm going to give you guys 3 seconds to imagine or to draw what you think that this would be labeled as before I reveal it. So 3, 2. Okay, so this is what we saw. We see very high volume here that, again, cut off, sorry. We see the PSY, and then we get the buying climax. So remember, this is reaccumulation. So this phase A is going to look the same as, this phase A. They're going to look the exact same because the distribution in the reaccumulation phase A will be the same. Just want to put that in there. So preliminary supply here, and then we get our buying climax as many retail traders buy in. We get that massive high price tail. Now we get this automatic rally back downward. And now what we see here is price moves up but does not break above the high of the buying climax. After that, we see the ST, the secondary test. And then price just consolidates for a bit and then does not break the high of the previous high here. After this, we get a very violent, quick momentum down move, but we see these low price tails on high volume. Low price tails on high volume below consolidation typically means that this could be a market fake out, also known as the market spring, and price could go higher. So then we get the test here, and then we get this. This is the absolute best spot to buy into the uptrend, right here. And price went higher. So right here is where, would have been a good place to buy. But in 2020 hindsight, another just beautiful spot to buy would be here-ish. With the beginning of the markup phase, if you see price closing into consolidation here on good momentum, and you see this kind of market formation, this is just a good spot to buy because institutions have likely accumulated positions, and you can accumulate a position too in the direction of where they're going to press price back upward. So I also just want to show it here, the distribution to phase A that you're going to see, right? Phase A, and then this is going to be the rest. So the ST in the spring, we see that here, ST spring test, and then we get and then we get the test here, and this test really looks like what actually happened, right? Looks very, very similar. Then after we get that test, we get this kind of LPS move, boom, boom, LPS. After that, we get the BU, which is actually, pardon me, LPS move was about here, and then we get the backup here, which is consolidation at resistance, as institutions are just building up their positions and getting ready for the move to occur, and then we get that move. All right, so I know this was a very technical video that went really in depth of just the individual nature of Wyckoff Market Theory. So if you do have any questions on this material, you can ask them in the YouTube comments below, or you could also join the Discord, which is free, where we have thousands of traders who are talking about stuff like this. So yeah, happy trading and have a good day.